Hello, I'm Catherine Bond from the Northampton Lettings and Estate Agency Northwood, and in today's video I'm going to be talking about investing in buy-to-let. With interest rates at an all-time low, investing in the Northampton property market is becoming more and more appealing, especially against putting your cash into building societies where you can achieve less than 1% of interest per year, or gambling your money on the stock market. Also, with the risks of becoming a landlord covered by our unique guaranteed rent scheme, I'm getting more and more calls from investors looking to move into the buy-to-let market. So how do you earn money from investing in property? Well, as I've said before, investing in property should be a long-term game, but there are two ways in which you can earn money from property.
Firstly, there's the capital growth, which is also known as capital appreciation, and this is when a property increases in value over time. Now, this has been strong in recent times in Northampton, but obviously the value of property can go up as well as down, just like shares do, but the initial purchase price rarely decreases. Over the last 5 years, an average Northampton property has risen by £58,700, which is the equivalent to £32.16 a day, and takes the current average value to £240,600. And secondly, there's the rental income, and hopefully this will also grow over time too. So to work out your yield, you divide the annual rent into the value or purchase price of the property, and this is your yield or annual return. A good yield will range from about 5% a year, and properties I consider to be decent buy-to-let deals that I often post about on my property blog can be around 7% in Northampton.
However, something I haven't spoken about before is the more specialist area of flipping property to make money. So flipping is buying a property, carrying out some minor cosmetics, and then reselling it quickly. Now, I've seen several investors recently who have made decent returns from this strategy. For example,
one Northampton investor flipped a lovely 3-bedroom semi-detached property on Sandyland Road, paying £155,000 for it in May 2015, and then selling it again after doing some basic cosmetic works. It sold for £219,000 in October 2016. So that's almost a 42% return before costs, or an equivalent 26.87% AER. In February 2015, another Northampton investor paid £105,000 for this 2-bedroom property on Lower Adelaide Street. And as you can see, some cosmetic work was done to the property, and it was resold a few months ago for £136,500. That's a 30% return before costs, or an annual return equivalent of 16.53% AER.
So this demonstrates how the Northampton property market has not only provided very strong returns for the average investor over the last 5 years, but also how it has allowed a group of motivated buy-to-let landlords and investors in Northampton to become particularly wealthy. Now, as I mentioned a few weeks ago in my Northampton property blog, and please do subscribe if you haven't done so already, more and more Northampton people may be giving up the opportunity of owning their own homes and instead are accepting long-term renting, but buy-to-let continues to grow from strength to strength. So if you want to know what makes a decent buy-to-let property here in Northampton, then please get in contact with me via the blog, which you can see the address below, or call in our office in Northampton on 01604 60 70 80.